According to many financial experts, a complete collapse of the US dollar is highly unlikely. Still, with JP Morgan Research estimating a 40% chance the US could enter a recession by the end of 2025, understanding the signs, potential outcomes, and how to be financially prepared is more important than ever. A dollar collapse refers to a sharp decline in the value of the US dollar, which could cause serious economic instability, skyrocketing prices, and widespread anxiety among Americans. In this guide, we'll break down what a dollar collapse actually entails, how realistic the scenario is, and what it would mean for everything from your 401k to homeownership. By the end, you'll be equipped with actionable strategies to protect yourself and your finances. What is a US dollar collapse? A collapse of the US dollar occurs when its value falls dramatically against other global currencies. This scenario could spark massive inflation, making everyday items far more expensive for Americans. Several triggers could cause this: a deep loss of global confidence in the US economy, soaring national debt, or major geopolitical events that push countries to abandon the dollar as the world's reserve currency. Even though the likelihood is low, a dollar collapse would have massive ripple effects across global markets, deeply impacting trade, investment portfolios, and overall financial stability both at home and abroad. What would a collapse really mean? If the dollar were to lose significant value, the purchasing power of American consumers would nosedive. Imports would become more expensive, international trade would be disrupted, and some countries may refuse to accept the dollar altogether. In such a scenario, the financial lives of everyday Americans will be turned upside down. Essentials like food and gas would become much more expensive, and savings could lose substantial value, leading to widespread concern and uncertainty. What could cause the US dollar to collapse? Here are several potential drivers behind a future collapse, according to financial analysts. Exploding national debt. As of now, U.S. national debt is at a staggering $34.62 trillion, growing faster than any other developed nation. This rapid debt increase undermines economic confidence. Rising inflation. Food prices rose 5.8% in 2023 alone, according to USDA data. As inflation climbs, more dollars are needed to purchase the same goods, reducing overall value. Increased use of alternative currencies. The US dollar remains dominant in global trade, but alternatives like the Chinese yuan are slowly gaining traction. A diversified currency system could gradually erode the dollar's influence. Declining global trust. If international confidence in how the US manages debt, inflation, or its economy falters, countries may begin to reduce their dollar holdings. That shift could trigger a downward spiral in dollar value. Is the US dollar on the brink of collapse? Most economists don't think so, but some voices raise concerns. Why some believe the dollar could collapse? Gail Allard, economics professor at IE Business School, highlights America's growing national debt as a possible trigger. Should the dollar decline, the US might increase interest rates to prop it up. This might briefly boost its value, but would likely come at the expense of both domestic and global economic growth. If international confidence erodes, borrowing costs could surge, threatening financial stability on a larger scale. Why others are not worried? Kathy Jones, managing director at the Schwab Center for Financial Research, offers a more optimistic view. She notes that the dollar has maintained a strong position globally over the last decade. It continues to be the primary currency for global trade and finance. Jones also emphasizes that policymakers have tools, like interest rate changes and fiscal policy measures, that help maintain economic equilibrium during periods of instability. When might a collapse occur? There's no specific timeline for such an event, and most experts aren't forecasting one in the near future. Still, Mitch Daniels, former governor and co-chair of the Committee for a Responsible Federal Budget, warns the country is racing toward a fiscal apocalypse due to unchecked spending. Even so, Kathy Jones believes that while the world may gradually move toward less reliance on the dollar, a sudden crash is highly unlikely. The national debt is undeniably pressing, but how and when its effects will unfold is still up in the air. What would be the effects of a US dollar collapse? Category: possible consequences. Retirement funds could experience steep losses, particularly if heavily tied to US assets. Housing mortgage rates would climb, and property values may decrease. Borrowing loan interest rates would rise, making borrowing harder for consumers and businesses. Credit cards interest rates would increase even further, making debt repayment more difficult. Everyday goods inflation would push up the prices of essentials like food, fuel, and utilities. Investments, US dollar-backed investments, stocks, bonds, mutual funds, would drop in value. How to get ready for a possible dollar downer. Smart financial moves. Diversify your portfolio. Spread investments across a variety of sectors, including real estate, international assets, and precious metals like gold, which recently hit its peak since mid-2020. Reduce debt. Focus on paying off high-interest liabilities such as credit cards, which can become burdensome during financial turbulence. Save for emergencies. A solid cash reserve can provide critical support if employment or income is disrupted. Investigate precious metal dealers. If you're considering buying gold or silver, ensure you're working with trustworthy and certified sellers. Survival-minded preparations. Stock up on basics. Take advantage of sales to build a small stash of non-perishable foods and clean water. Enhance self-reliance. Learn practical skills like gardening, minor home repairs, or basic trading. Strengthen your community ties. Being part of a supportive network can offer shared resources, information, and peace of mind in times of crisis. In summary, although a total collapse of the US dollar is unlikely in the near future, even a significant drop in its value could have far-reaching effects. The COVID-19 pandemic showed how quickly everyday life can be disrupted and why being prepared matters. By spreading your investments, minimizing debt, saving smart, and developing useful life skills, you'll put yourself in a stronger position to weather financial storms, whatever shape they may take.